Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you here today. Today's date, August 27th. We'd like to welcome all of you. We have Grace, Daksha, Fayez, GH or Grace H, and Dom and Ray and many others. We also have welcome to you. We also have Connie Hill with us. We always kind of joke that when Connie and myself are tag teaming a webcast, we call ourselves the Redheads. And the Redheads tend to, they're kind of interesting people. So, and we look to kind of bring that out here today. Irish people, that is. And a little fun with Connie there. And hopefully she's laughing, and so are you. Now, just real quick, I've been up since 12:30 this morning. I don't know how I'm even up right now, but we're going to go for it anyway. Now, just real quick, remember, you can find Connie and myself on X. There's my handle right there, at James Boyd CS. I do post throughout the day, so check that out, and so does Connie. We do post educational examples. They're not recommendations. We also post announcements as well. I will post that I will be out on Thursday and Friday as I will be traveling back east. Something came up late last night. So just real quick as we get started, I want to give us a quick reminder that with what we discussed, the information here is provided for general informational purposes only. Now, when we talk about examples, Schwab does not recommend the use of technical analysis as a sole means of research. So that's why they have a class on fundamental analysis. That's one of the reasons. Now, remember, when we talk about technical analysis, we're looking at, let's say, the study of price and volume up until that point. That's going to be very important in our discussion. Fundamental analysis, we're going to look at the fundamental numbers up until this point, okay? So if the technical analysis look phenomenal, the fundamentals look strong, that doesn't mean that they're going to be strong either technically or fundamentally in the future. So you have to understand that we're kind of looking at the information that's given and trying to make an investment decision, thinking, wondering, potentially, perhaps, all the words, adjectives above, could that trend continue? And we'll talk about that technically and fundamentally. Now remember, our examples will be done in the paper money software application for educational purposes only. Investing involves risk, including loss of principal. And as we get started here today, we'll talk about some of these growth names. We got NVIDIA coming up in the after hours. Oh, don't act like you didn't already know that. But we're going to kind of talk about some of those growth areas. Now, some of our examples might be more examples of value. I am not prepared, at least I'm not going to talk. I could always talk about income. But the biggest thing is I'm not going to talk about income stocks. We'll focus more on growth and value. Now, just real quick, I do see JP's question, and we will get to that just in a moment. Now, first off, said yesterday that the S&P kind of looked like was it yesterday? Yeah, it was yesterday. Okay, days kind of all blur together. But the big thing is we kind of had like a pennant pattern. I haven't touched it, I swear. Okay, well, kind of look at this pennant symmetrical triangle. Didn't touch it since yesterday. Kind of looks like it's trying to break out. Now, remember with that discussion yesterday and Monday when we kind of talked about when you get consolidation, sometimes we just sell because we're like, oh, I'm going to go to cash. Well, this is kind of where the investor's now thinking, now I got to put the positions back on. Potentially that investor might be thinking, because now we're starting to get the breakout. Be very careful, again, of doing everything in the shorter term. This is why some investors like to see intermediate and longer term setups in their portfolio as well, not just short term. So the S&P, that was a brand new high. Okay, the bulls may be charging a little bit. But the biggest thing is it's at least not much of a consolidation, and it's pushing to a high again. Now, could NVIDIA push it higher? About ready to find out. Now, if we take a look at, let's say, the Dow Jones itself, that's the one. Now, this is where I'm really interested in knowing the answer to this question. And my question to you, Ricebird, Fayez, Dean, and many others, we saw this close higher here on 822. And a lot of people say, look, what I'm looking for is a breakout, and I'm looking for a bounce setup. Now, calling all technicians. Okay, would you say that in the last 2-3 days, would you say that this is a bounce setup? I mean, what do you look for to say, yes, it is a bounce setup? Well, many investors might say, James, this is the difference that we show versus maybe what other people say. There could be value for both. So when we talk about the breakout, we actually see that it did make a higher high. Check. We also do see, for example, there was a red candle. What's the significance? We've been hammering over the last couple weeks. The shorter, the shallower the pullback in duration and percentage. Remember, duration is only 1 day, and the percentage, it didn't even pull back that much. It only pulled back about 1% from the high before investors came back in. How do we know they came back in? Well, the green candles, okay? Now, if you take a look at this on 8/26, if we looked at that and said, is that a bounce? No, that's what we call a trigger day. Trigger day is not a hold. It's a green candle, but not hold, okay? Now, if we said, what is the lowest, most recent red candle? Definitive answer, not a maybe, depends, okay? It's right here on 8/25. So if the investor said, James, I want to see a close above, trade above the high of the low day, we need to get above 8/25. Where are we now? Oh, we're very close. What was the high of the 8/25 day? The answer, 456.05. Where are we at now? We need 456.05, and we're about 9 pennies away. Okay, so if you said, James, I want to see the breakout with a bounce, the bounce for that investor says, I need a hold or a trade above the high of the low day, we're 9 pennies off on the Dow Jones itself. Now, if we take a look at this, I want to go back to just real quick. So would you say that this is a bounce setup for you? Yes or no? I'm not sure if I got an answer. And when I don't get a yes or no, it makes me a little nervous that we got some fence sitters. So let me shake the fence a little bit. Yes or no? Now, all I'm asking is, if you said the first example, I would like to see trade above the high of the low day or close above the high of the low day, that investor needs 9 more pennies. The investor says no to that. But there's other investors that say, James, I don't take the red candle. I take the lowest day. And the lowest day in the pullback was this. So for that investor, they might say, James, it is meeting my criteria because I take the low day as a green or a red candle. Well, why would you take the red one? You really want more of a confirmation, okay? So if you said an earlier entry here in this case, you would say a hold or hold today so far, okay, if we can close here. If we're saying hold, it's trying to get above the red candle. All right, now we're getting, okay, I like this now. So when I shook that fence, all of a sudden the answers started coming in. Funny how that happens. Now, just want to go back to the rut real quick. Now, if we said, we want more confirmation, we actually see this big push up on the green candle. Notice we did not even pull back that much from the high. We didn't. And if you look at that, we see that we went down for 1 day. Now, I hope that if I have done anything, and it would hurt my feelings, I mean, it really would. If you have learned anything from what we've talked about, I hope you remember, is the price above the 10-day moving average, number one. And number two is, when we get a pullback, is the pullback less than 3 days? Now, in this example, the Russell, we pulled back for a day. What does that mean? Well, the shorter duration of time it is, the greater the chance of what? A potential bounce to the upside. Now, when we go back and look at this and say, did we close above the high of the low day yesterday? The answer is yes. If you actually look on the chart, there's a green candle. So if you have kind of focused a little bit on small caps, you've been trying to ride that trend over the last couple days, 2, 3, 4 days. And if we said, well, James, is today a hold again? And the answer is yes, it is. It's just day 2 of that hold. Now, with technicians, what they're doing is they're using all the previous history of price, okay? Typically, we look at a 1-year daily chart, and they're kind of trying to make some, take a look at what the trend has been, where the support resistance and the momentum and the volume, etc. But that doesn't get us past today. We don't know what's happening on the other side of the curtain. And that's the same thing with fundamental analysis. With technical analysis, you're thinking, maybe could that trend continue? Technically. Now, what I'm going to do is just real quick, the NASDAQ had been the area that has struggled a little bit. Are we starting to kind of see a little rebirth in the NASDAQ? What might kind of give us a little yes to this? Well, if you look at this on the 10-period moving average, we've had a start. Of the 3 kind of stepping stones, 10-day moving average going green? Yes. Did we get a crossover? No. Did we get a 20-period moving average going green? No. So this is kind of early stage here as far as getting across. The NASDAQ is still lagging. Now, you would like to see if the S&P, S&P, Dow, Russell are going to the upside. I think many technicians would like to see the NASDAQ joining. Does the NASDAQ always have to lead to the upside? The answer is no. Okay? Now, quickly, when we talk about, let's say, some of these sectors, it was hard not to see some of the movement in oil lately. Energy, if you like to play sectors. Now, Connie teaches a class on Monday afternoon. I have no clue why you would not join that. Connie teaches Monday at 4 p.m. Eastern, okay? Join her. That session is not recorded, so that's why you want to go live. Now, Kevin and I also teach on Friday, 9:30 a.m. Eastern on ETFs. Some investors say, James, I like to buy maybe a grouping of stocks as maybe a way to diversify in a portfolio. Energies might be building up some steam there to try to break to the upside. That's an area to continue to watch. Basic materials, that's another area that we're going to kind of continue to watch. We've been making some higher lows on that chart. Little run to the upside, pull back. Little run to the upside, pull back. Run to the upside, pull back. Run to the upside, pull back. Now, James, does that ever get tired of just repeating yourself like that? Absolutely not. What you're now going to notice is at the bottom of every pullback is what? At the bottom of this pullback was what? At the bottom of this pullback was what? At the bottom of this pullback was what? And when I say what it was, we're referring to the color of the candles. It is a very easy pattern. Don't overlook this. Well, James, at the bottom of every higher low, duh, James. It should really be, James, at the bottom of every higher low, there's a R, a red candle, and there's a green candle. So the red candle is actually where the sellers kind of stop having the control, and the green candle, G, is where the buyers start to push back to the upside. So with every one of these higher lows, here, and here, you can easily read higher lows. And if you got higher lows, you got trend at that moment in time. So basic materials, we talked about gold. That is still an area to watch, and so is silver, okay? Now, don't forget that. Now, by the way, it doesn't matter if it's a sector, if it doesn't matter if it's an individual stock or any product out there. You could read higher lows just like that, even without using some other type of analysis. Very simple to see that. Now, when we look at, let's say, technology, is that moving? Looks like the NASDAQ. The sector, a little bit stronger, okay, than the NASDAQ. Technology sector, a little bit stronger than the NASDAQ. How do I come to that comment? Well, the moving averages are closer together, okay? NASDAQ, a little bit more separation. When you take a look at, let's say, the IXC, I'm actually trying to hold myself back on what I really want to talk about, but I'm coming to it because I can't take it any longer. I'm about ready to burst. But if I take a look at this, horizontal resistance on communications, but you really have some a higher low developing. If we go back to this, really this old resistance, it's too early to say resistance. I'm not saying it yet. Haven't earned it yet. And if you go back, old resistance becoming new potential, what? Say it out loud so I can hear you. I can't hear you. What'd you say? Well, yeah. The old resistance becoming, say it again, new support. It even left you a long lower shadow that you could measure with a tape measure, okay? And it got a pretty strong bounce 2, 3, 4 days ago, and we are in kind of that process about really trying to make another higher low again. You get another higher low, you got a descending triangle forming on communications. Don't say you didn't see it, okay? It's been happening for a little while. Don't say you didn't see it, okay? The thing what we got to stop doing is if we do a routine, we start to see the patterns. If you're looking at all new stuff every day, I don't think you're really getting a whole lot of confidence, okay? So notice when you come to my class, we're kind of doing this pattern over and over again, and it's on purpose. Now, if you look at financials, which I really want to talk about, we've said this like a broken record. Well, if the financials or industrials are hitting, okay, new highs, the economy, stock market is probably not in a recession. Okay. Today, a new high again. I want to talk to some of those stocks in just a moment. Now, if you also take a look at, let's say, discretionaries real quick, discretionaries that was also a shorter term higher high. Okay. And if you also take a look at industrials for just a quick peek before we look at individual stocks, that is not completely reversed yet, but it's kind of coming out of a little basing pattern. That's an area to kind of keep an eye on. Maybe Boeing, maybe Caterpillar, which we'll talk about. And when we come to the last one, just real quick, let's say transports, not necessarily breaking to the upside, at least for the sector yet, but still holding the support level. Now stop. In 15 minutes, I went over the disclosures. I went over some announcements, and we went over indexes. We talked through them, and we also talked through the sectors. Who doesn't have 15 minutes? I got 4 kids and a dog, okay? If I got 4 kids and a dog, and I got other things on other kind of work I do, service-wise on the side, you got a really good chance of having 15 minutes, okay? Now, the nice thing is you don't have to always be on a computer. You can be on an iPad. You can be on your mobile phone, et cetera, et cetera. That's the nice thing. Now, let's kind of talk about some of the things. JP, I got your question in my back pocket. So first off, I wanted to answer JP's question, and it's really regarding stocks, example given. By the way, I would say that this is one of the hardest things to do, okay? And what is that? So example given, there was a stock as of lately, Microsoft, that had been going to the upside. Now remember, we use, okay, the 20-period moving average as a gauge of trend, okay? So JP's comment was, if the stock is in trend 3, what is a way to kind of like try to trade the trend, but maybe potentially profit take? Well, my first answer would be, number one is identify the target, okay? Or a target, and I'll write this down just so we can kind of make sure we have definitive points, is number one is identify targets and consider using reward to risk stop methodology. Okay, so this is where you're not necessarily looking at moving averages. You're actually saying how close is the price to the targets, and you're playing the numbers game. What is the reward remaining to the potential risk to the downside? Okay, and we've talked quite a bit about that. Now, the second part of this is using the 10-day, okay, moving average as a way to eject. Now, when I say eject, we're talking about selling manually. Okay, so let me kind of give you an example of what I mean by this. Okay, now I'm going to tell you right now, if I went back, and by the way, why am I bringing up Microsoft? Because it's one example that we had. Okay, this is a stock where, for example, it went up. The 10-day moving average was green. All of a sudden, it was a red candle day. Red candle day, someone says, my gosh, I'm going to sell. And they sell on that day only to see the stock go up the very next day. Now they're like, geez, I'm not sure what to do. Well, how about actually kind of go back to what we're just talking about? Well, the very next day it goes up, it gaps to the upside, gap goes up even more. Oh, red candle, sell, red candle, weakness. Oh, very next day it closes higher. So what happens now is the investors had 2 times now where they never followed a rule set, and they kind of puckered to emotion, okay? Now, I'm not making fun of anybody. I've done that too, okay? Now, eventually you got to ask yourself, do you really want to ride trend, or do you want to pucker to emotion? I'm going to tell you, it's there, okay? You go forward to the very next day, gaps to the upside. This is 2 days after you sell. You feel like you're just always a day late, dollar short, or you're selling early and the trend is not over. Nothing on that chart told you the trend was over outside a color of the candle. The color of the candle set a trap for you emotionally, and you aborted the rule set that you could have. Now you go forward to the very next sell again, sell, and only to see the stock go up the very next day. You get where we're going with this? 3 times the investor fell for it, right? I fell for it too. Don't worry, I ain't beating anybody up, okay? Now, what you're now going to see is the stock goes up again. Oh my gosh, sell. And all of a sudden it goes up again. Oh my gosh, pull my hair out. I don't know when to get out, okay? I don't know when to get in, okay? Well, this kind of comes back to using the 10-day moving average as a way to eject. So when the 10-day moving average, we're talking about, we've said for a long time, when the 10-day EMA, or excuse me, the 10-day whole, or if you use the EMA, etc., turns red. That is the first sign if we're talking about you're not at the target. So I'm confused now. Why would someone use number 1 or 2? Well, they would use number 1 if you are close to the target. Well, wonder if you're not close to the target. Well, then you're using number 2, okay? But if we're close to the target, when you look at the reward to risk, let's say you have $1 to go to the upside of the target and you have $4 of risk to the downside, the investor is really clamping down their stops. They're not near the target and they don't have that reward risk ratio like that, they're using number 2, okay? Number 2, that using the 10-day moving average as a way to eject, you're manually going in and selling or considering it. That is the earliest actually way to identify selling pressure. Now, the big thing is, does that nail the top? It doesn't nail the top. You got to get the stock to go down somewhat. So the investor sells 4 times right here, sells again, only to see the stock go up the very next day. Now, what happens is the stock actually gaps up here, it gaps up here, it gaps up here. And now the investor's pulling their hair out. Why are they pulling their hair out? Well, because 4 times they fell for the emotional trap, and then the stock it just kept going going to the upside. Red candle, they sell again, only to see the stock hold up the very next day. And the first time that stock actually had that number 2 condition that we just talked about was right there. Okay, I'm going to tell you right now. Look, don't beat yourself up. I hope that you got started on this early enough where you have some time to learn some of these things. Okay, you got to really ask yourself: are you going to kind of pucker to the emotion, or is it like you're really going to be a technician and trade what's on the chart? We're at the crossroads here. Okay, I mean we're literally now like. Does the investor want to change course? Okay. Now, if you fell for those things like I did, we're all friends here. Okay. This is Technical Analysis Anonymous. Hi, my name is James. What's your name? Okay. Right. Now, the biggest sexy thing is if the investor says, I'm going to sell, the investor needs to also understand what is the reentry. Why don't people sell after a valid sell signal? They don't know when to sell because the flip of the sell is just the opposite. Instead of getting a red moving average line, it's a green moving average line. What we really got to come to is how many of your trades were really done based off a system. And I think if you checked kind of people's trades, you would be stunned how there's not any real common denominators. It's all over the place. I challenge you in paper money to trade the 1, 2, 3 method that we talk about, okay, and be religious technically in the paper money account and practice it. And I'm telling you, it's gonna press your emotions, okay? And I think it would be very interesting learning experience. Speaking of that, let's practice in the paper money account ourselves. Now I want to go back to something. To example given Caterpillar, okay? Now, if we look at a stock like Caterpillar, this is a stock, what we're gonna do is kind of take a look at this. And what you're now gonna notice is we kind of have this little run so we have a prior high, right? And then we kind of have, let's say, a base of support. Now, if we went back and looked at this and said, geez, wonder if someone got in on 1, 2, 3, okay? 1 is the most aggressive entry, okay? And 2 is really the moving average crossover or the 20 period moving average going green. 3, okay? So the issue is not the moving averages. The issue is the investor, the person sitting in the seat. And can they trade the signal? That's really what it comes down to. Can't blame the stock market here, okay? Stock market is just going to go up or down, say sideways. But it is the investor going to trade a signal. Now, 1 represents the most aggressive entry, 2 is more confirmation, 3 is more confirmation. You decide which one of those entries you want to take. Now, you might say, James, I'm going to do dollar cost averaging. If I normally do a $10,000 position, I'm going to buy 3,300 on the first, 3,300 on the second, 3,300 on the third. Okay? So you're kind of smoothing it out. Now, or you could say, I'm going to buy some here, $5,000, buy the other $5,000 in the confirmation. It doesn't have to be all at once. You get to decide. Now, what you're going to now notice really on Caterpillar is a little run to the upside and a little yank back. Now, on this chart, what you're now going to notice is we see that we've gone down for 1, uno, dos, and now what you're going to see is a little bullish engulfing. Now, if we go back and kind of take a look at which red candle is the lowest, it was yesterday. So why is there a green dot on the chart? Well, that's a trade above the high of the low day. Now, what I'm going to do here is if the investor is buying here, if the investor is, they're really thinking that this stock might continue to the upside. Now, do we know what's going to happen beyond tomorrow? Absolutely not. Okay? Now, I'm going to look at the fundamentals in just a moment. Okay? But what I'm now going to do is I'm going to go back to where was this old high and then where was this, I like to call it a trough. We would kind of look at this and kind of say that it's like a U pattern. Okay? Now, if you look at this, that 161 could be a potential target area. I have no clue if it's going to go up to that level. And if we take a look at this and we said, is there anything to the upside? We have the 261. Now, some traders, and I know many of you are here, okay? You're like, hey, look, give me that 200%. I'm going to say that as default. That 200%, just so we're 100% clear, is the channel width, and it just added on top. So now, why do people use the 200? Well, they kind of want to have something that might be a little bit more realistic than a 261 extension target, okay? Has it ever sold at 200 and gone right to the 261 and you've been sick that actually you sold at the 200? Sure, okay? Welcome to trading, okay? You set a target and sometimes it overshoots. You set a target and sometimes it falls short. It happens on both sides. Now, what I'm going to do in this is we're going to right-click on this chart and I'm going to come back to the paper money account. We're going to type in Caterpillar. And if we type in Caterpillar, now, by the way, if you want to look at this on a weekly chart, it kind of looks like more like a V pattern. If we actually pull this back up, let's say on the daily chart, pull this back up, 1 year daily, we're going to right click there and we're going to go with OCO bracket. Okay. Now, you remember that comment we talked about, like setting that reward risk methodology? Well, that target, if I use 200%, it's going to be at 468.04. Okay. So if we start getting 1 to 2% away from that level, which by the way is like 462, 460-ish, somewhere in that ballpark. 1%, yeah, well, it's going to be, let me put that, go back, 468, yeah, 462, 2%, 9, about 460-ish, somewhere in that ballpark. If we start getting in that area, you probably know you're pretty close to that targeting. We're not waiting until the very last second to do the analysis because the investor might want to artificially move up those stops more closely. The closer the price is to the target, the further the stock could be off support. That's why they're setting the stops tighter. So we're going to put a target at 468. Now, if we kind of said underneath us, where's maybe a potential level of support? Well, we could take the stop underneath today's open price. Some investors do that, pretty tight. But if we took 425.69 less 2%, it's going to be 417.17. Now, I'll be honest with you. I used to think about like, what's the reward to the risk? I've said a number of times, it's all fabrication. You could type in high pie in the sky numbers and think it's a sweet trade, set really tight stops and think you're doing a great job managing risk, but that doesn't tell you anything about probabilities at all. Okay? So you might want to kind of look and see, hey, what's the likelihood of the stock going to 468 maybe in a 30-day time period? What's the likelihood of the stock going down to the 417 in a 30-day time period? The other thing that doesn't factor in is what's the market condition? What's the sector condition? What's the industry group condition? So that can also play a factor into whether we hit the target or we hit the stop as well. Now, what I'm going to do is going to go with GTC. Now, I'm going to go back to the position sizing just briefly and type in the number. How many shares could this be? Answer is about 15 shares. So I'm going to take this back, 15 shares. There it is. So trade number one here, buying the shares of the stock at that price or less. It's a limit, target, and then a stop. Okay? Now, Jack, this class is a stock-based class. Okay? So this would not be doing an example of, like, say, a derivative. Now, even if we could do a derivative, since it is a $433 stock, might be pretty unlikely to buy 100 shares of this. Okay? Now, are all investors like that? No. Some investors might say, well, that's normally what I do. Well, they might consider that strategy. That's going to change the potential reward and the risk. Okay? If I go confirm and send, trade number one, remember with a stop, there's no guarantee the execution price will be equal to or near the activation price. So I'm going to take that trade, and now we're going to look and see, okay, could that stock break to the upside? Okay, now I want to also go back to, I'm going to fast fire through a couple Dow stocks. Yesterday, we kind of made mention of Chevron, okay? And if you kind of take a look at Chevron kind of taking a little leadership here, looks just like the Dow, broke out above horizontal and getting a little bit of a bounce. Now, if you take a look at, let's say, also AXP as well, you're going to kind of see that that's just kind of marching higher. Now, if we go back just a couple of days ago, it kind of looked like this diagonal line of resistance, right? Kind of your lower low, lower high, and it just kind of floated to the upside. It had a pretty big gap right in there, and it's just kind of taken off. One day pullback, all into sea of bullish engulfing, and then push up again. Now, don't worry, I'm going to come back to that area. Goldman Sachs, GS, looks very much like, now it has a $4 dividend upcoming, and what you're now going to notice is it kind of also has like a V pattern itself. Now, a $751 stock, that's probably not going to lend to too many shares of stock. Now, in our examples, we bought 3 shares, 5 shares, 7 shares, 10 shares sometimes. Doesn't mean they can't gain or lose up or down. Now, what I want to do is I want to kind of show this. So keep an eye on American Express. Keep an eye on GS. We have GS already. But the one that we're going to also kind of keep an eye on just real quick is Amazon. And if you look at Amazon, that's the one that's kind of maybe in a symmetrical triangle, has not, or pennant, has not broken out yet. But one thing I want to kind of challenge us to do in the paid money account is, well, if we kind of see something that's coming to the apex of this type of pattern, what might the investor do? Well, number one, simplest. They might say, James, I'm going to right click right above the resistance line, and I'm going to go down to where it says create an alert. Alert for what? Well, if Amazon starts breaking above resistance, I'm going to put in caps, breakout alert. Now, if I'm at Harmon's, grocery store, Walmart, wherever I am getting groceries or whatever, and on my watch, I get, for example, Amazon breakout alert at or above a price, it will come on your watch. If you have one, let's say an iWatch, a phone, an email, right? This is just saying if the stock gets at or above this price, breakout alert. Then you could evaluate as something you consider. That's one way. Now, that's not really committal, right? That's just kind of saying price alert. If we actually said, no, I was kind of thinking about something a little bit more here, a little bit more commitment, we're going to go buy custom with OCO bracket. Now, remember what I kind of said before is sometimes as people we're non-committal, okay? You don't want to quite commit, okay? Now, I want to have a little fun with you. Here we are at at the start of the college football season and the NFL. Everyone's a winner, okay? And we're all undefeated. So our confidence should be through the roof. Okay. Now, I won't tell you who my team is because I don't know if they're going to be any good this year. I've been saying the last 10 years they're going to be good, but they haven't. Now, the biggest thing is we're going to actually set up buy stop. Wherever I right-clicked on the chart, that's where the price is. Now, what we could do, we normally would show the difference between the limit and the stop, maybe 50 cents, maybe $1, okay? So what it's saying is the stock needs to get to 230.08 or higher, okay? Josh, if those Indiana Hoosiers they were amazing last year. I didn't know what was going on, okay? Thought it was all rigged. I don't think they were cheating. I think they were just that good. Now, 230.08. I won't tell you who my team is because they got whooped by the Indiana Hoosiers. At that point, I threw in the towel. Okay. And now, if we take a look at this, 230.08, and you're now going to see 230.58. So it's saying don't buy it unless it gets above 230.08, and it puts a cap at 230.58. It's allowed to buy in that range, dated GTC. Now, when we look at the stop underneath, if someone has this pattern, the logical places to set the stop, perhaps, is underneath the support. Duh, right? The investor might say to James, okay? You could say duh to me. I don't take that seriously. If we take a look and say, where's the secondary? Well, it might be underneath the trend line again, where it actually had that higher low. Okay, so those could be two areas. But what if I said I want to set it a little bit looser? Well, if I say a little looser, 222, okay, 44, less 2%, it's going to give us 217.99. Type that in, 217.99. We go back to the position sizing. Okay, type that number in. Want to see how many shares? It's really going to be dollar amount I need to do when I type in that. It's going to be 28 shares. Okay, so if I click on those pool balls, type in 28 shares, there it is. So we got the stop. That's saying it. Now remember, the stop is not valid until the order fills, meaning the purchase. So this stop and target means nothing. It has to fill first. Now, a lot of times people say, I'm not comfortable with that. Well, let's kind of just maybe give this a week's worth of time. Look, I'm going to give a pending order that I'll give it and say, look, cancel this order 1 week from today. Okay? So next week will be September 3rd. Can't even believe it. Okay, here we are, September. Okay, September 3rd. And in 1 week, if it fills, great. If it doesn't, cancel the order. Okay, now, data GTC. Now, target-wise, some technicians, they might kind of take the width of this. Now, I don't know, man. I'm not from the show me state, okay, Missouri. But whenever someone does that, I'm thinking, man, this is rosy. You're just counting on just the perfect scenario. I'm always a little bit more of a skeptical person, just the way it is. I have to live with myself. I like to kind of say, look, let's kind of take something in, kind of a little bit more realistic. So if we kind of use measurement 1, this is going to give a big price target. If I take the second high or low in there, it's going to give a smaller price target, okay? And this one right here is going to give the smallest price target. So the difference between 1, 2, and 3 is just the width from support to resistance. Now, if I took kind of that measurement number 2 and said, what is that measurement? Well, if we kind of go from about right there where it pulled back to, and we went up to the top, it's right around $17. So if we added $17 to the resistance, it's going to be right around 246 and change. Now, we could go back on the chart and say, well, geez, did that 246 relate to anything prior? And it might. On Amazon, it didn't, okay? But if I go back and put that right there, okay? Now, some investor might look at reward to risk. I don't think that completely tells the whole story, okay? We're going to go confirm and send. Second trade we're actually going to do here is Amazon, target, stop. Now, remember, this has a condition. This is saying, look, there is a pending buy order. Now, by the way, if that stock goes up to that price and does fill, we know, we've talked about this today, that's no guarantee the stock's going to go up. It's just a setup. We got to see if it can continue. If If it doesn't fill, okay, it has 1 week to fill. And if it doesn't go up to that price and get filled, it cancels the order completely. So that first triggers OCO there. It first has to buy. And if it buys then the target and the stop are valid, okay? But the whole linchpin is, does the order get filled, okay? Now, what we're now going to go ahead and do is send the order. Now, a couple stocks. Now, David, I'm not going to say anything, okay? I do remember I'll just say this, sitting at Memorial Stadium, and it was Nebraska Cornhuskers versus the Miami Hurricanes. And these Miami fans, let's just say they had not position size, the amount of liquids they had. And they asked me a question. They said, hey, what does the N on the helmet stand for? Now that year, I was kind of just in the dumps there as far as my team, and I said the N on the helmet stands for nobodies. Now, I don't truly mean that, but I was emotionally beaten down following my favorite team. Anyway, a little fun there. So they got a good laugh for that. But now, a couple of stocks in closing, okay? If we go back and look at GM, we know that there's been some movements on kind of tariffs, et cetera, et cetera. GM has actually been pushing. Ford has also been pushing. If we said of the two, which might be on the cusp of a breakout, even a lower dollar stock, it's Ford. Now, we also talked about, let's say, some of these casino names. Did you take a look at Wynn? Did you take a look at LVS? Did you take a look at, for example, MGM? We brought these up because we said, hey, with some of the changes, potentially taxes with Social Security, things like that, people might have some additional income to spend potentially. Now, also, and just kind of closing here, when you look at WFC, we talked about a little channel. It has only taken 2 days to slice through 80% of that channel. It really makes you feel bad for the people that didn't watch the channel breakdown example, and when the investor might watch where the gap level is. If we see a red candle, we draw a line from the open of the red candle. And that was the linchpin. When we start getting a closing price above there, you're going to, especially when we saw stuff not just 5, 10 cents, the strongest movement we really had was 2 days ago on the 25th. And we've gone 80% of the way into that. Now, it's not just WFC. You're going to see it on Citi. You're going to see it on Morgan Stanley. You'll see it on Bank of America. And you're also seeing Bank of New York Mellon. We also talk about, let's say, Goldman Sachs as well. So these moves are not just one in the industry group or sector. You're seeing some width or some breadth, okay, in the movement in the sector, which might kind of show us a potentially stronger move. Now, I'm only going to kind of say this. Obviously, in the after hours, we'll watch and see what NVIDIA does, okay? This is obviously going to really kind of tell us, could the market go higher, lower? What are some of these fundamentals, okay? And can they live up to some of the numbers they've had historically, which can become difficult? So that's going to be something we watch as well. So I'm going to be out Thursday, Friday. Monday is Labor Day, which means you take a break from your labor, and I'll be back on Tuesday. I want to say thanks to Connie Hill for answering those questions in chat. Stay tuned for our next class coming up on markets and sectors. And thanks so much for your comments and your participation here today. You guys were a lively bunch, as always. And JP, hopefully that answer to your question was helpful. Now, just real quick, remember with what we discussed, it was done for example, illustrative purposes only. If you have not subscribed to the Trader Talks channel, it's free. Just reach out, smash the like button, smash the subscribe. It's the easiest thing to do. Okay, that way you can plug into the information. Give yourself a chance. And also remember that all investing involves risk. This has been the class on trading growth and value stocks with a couple examples here today in discussion. And with that said, have a great day, take care, and stay tuned for our next webcast coming up right at the top of the hour. Bye-bye.